Well, hi there folks, it's Matt Hayson here looking at this week's property market. Now they say a week is a long time in sport, and the same could be said for anybody that's out there trying to forecast what's unfolding with inflation and the impact on the cash rate. Now there were some hopes here in Australia that there would be an imminent cash rate cut, some predicting as early as April. However, that seems to have crumbled this week, with CBA boss Matt Comyn coming out and suggesting that he would not be surprised if the RBA didn't cut the cash rate at all this year and push that decision back into 2025. That said, CBA economists are still forecasting that the first cash rate cut will occur in September this year. However, US inflation this week has come through stronger than anticipated. Many were expecting it to come through at 2.9%. It sat at 3.1%, and Matt Comyn has suggested that these inflationary pressures do remain very persistent. We know that our RBA Governor, Michelle Bullock, has suggested that the job is not yet done in taming inflation, particularly here domestically. So this is a space that we really need to watch and monitor on a week-by-week basis at the moment. That said, new home loan approvals, they're on the rise. In fact, here in New South Wales, they've surged forward, up 16% this year compared to the corresponding period last year. Now, that's a really good sign on the part of buyers that are starting to understand that we're unlikely to see another cash rate increase. They can see where their repayments are going to be sitting over the near to longer term, and we'll see these buyers sweeping into the market over the coming weeks and months. That said, if you are a buyer and have been struggling to find that perfect home in the inner west, there's very good reason behind this, with latest analysis coming from the Managing Director of SQM Research, Louis Christopher, who suggested that many suburbs in the inner west are amongst the most tightly held in all of Australia. In fact, many of these suburbs have seen a staggering decline of up to 30% in new listings coming onto the market. Now, the data suggests that 1.2% of dwellings typically turn over in any suburb per year, but in Stanmore, that is leading the charge. Just 0.25% of properties there traded in the last 12 months. Balmain, not much better, 0.34%, and Marrickville at 0.4%. So that really reflects why we saw very good price growth in those suburbs over the last 12 months. The supply and demand was firmly in favour of sellers, and it kept that good competition per property. And then finally this week, the leasing crisis, we hear it all across the media. It is a real thing. Sydney vacancy levels are currently sitting at just 1.3%, which suggests in the areas that we're servicing, it's at 1%, even below that. And rents, they're continuing to increase. They're up to the 14th of February this year, 13.1%. So very tricky to find a rental property at the present time. And the auction clearance rate, that did edge forward this week. That's some good news. It came in just below 60% though, but more properties going under the hammer, with 923 properties scheduled to go to auction. So that would still suggest to us that though this market is evenly poised between buyers and sellers, but it is a two-speed market as well. A-grade properties being particularly sought after and is outpacing the market, whereas your B and C-grade properties still reflecting the buyers are showing caution before looking to make an offer. Which leads us into this weekend, folks, where we've got some amazing properties open for inspection. In fact, a huge wave of new properties have come onto the market, which is fantastic news if you're a buyer, and our entire team looks forward to helping you on your property journey. I'll see you all next week. Thanks for watching. Catch you then.